Good morning, everybody. Kirk Spano. It is February 21st, 2020, and I am back from surveying Puerto Rico. It was a fantastic trip. I will tell you that a lot of things that people believe about Puerto Rico are probably wrong, and some of the things are right. What I wrote on Facebook to my friends today was pretty simple. The idea that the island has been annihilated or that a storm could wash it away, if that's in anybody's head, is wrong. What the reality is that what I saw in Puerto Rico is very similar to what I saw in the Florida Keys, in that there's clearly hurricane damage to some places. People with money have been fixing it up. People without money haven't been. And you have people who have just abandoned all hope because they don't think they'll ever be able to afford it, so they're selling things. Some of the things they're selling are cheap. Some of the things are still expensive. And as things are, just like with stocks, each piece of real estate is unique. You have to figure out what you want to use it for and will it appreciate. And there are pieces that are going to make a lot of money over the next decade. And there are probably pieces there that should just be raised and left to grow palm trees and plantain trees again. San Juan, a very diverse city. You have Old San Juan, which is a historical district that they take very good care of as far as keeping it safe and making it attractive to walk through. And you see a lot of rich architecture going back hundreds of years. We stayed in a little inn where you walk in through the front door, and on the left there's an office, but forward there's an open air courtyard with the rooms on each side on both floors. Really one of those things that you see in a movie. You expect Antonio Banderas to pop out. So we moved around, saw the forts, a couple forts, very cool. The vantage points, I'll throw a couple pictures and articles, were pretty neat. Drove around the newer areas of town, which are right against older areas of town, and the juxtaposition of new money against generational poverty is pretty striking. Interestingly, never felt unsafe on the northern part of the island, even in the the worst neighborhoods. I should say the poorer neighborhoods, not necessarily worse. In San Juan, it's just the people were extremely nice. They welcomed the money. They know that their livelihoods are largely tourism based. When we went out to the west side of the island, from Aguadilla to Rincon, down to Mayaguez, and there's another city we were in. They had a luminescent bay on the south side of the island that I don't think most people know about. Most people hang out at the one on the northeast side of the island. I tell you, it was all pretty nice. As far as feeling safe, seeing that there's things to do, a lot of restaurants. I mean, there's stands on the sides of the road, on highways. Go down to the beach, somebody's got a stand. You have restaurants proper. It really was interesting. And what I would compare Puerto Rico to is a lot like kind of Chicagoland area, where you have some really great areas, but then you have some poverty-stricken areas. What we didn't experience was crime, but we were in the parts of the island where I don't think people normally talk about it. We got down to the south side of the island, not quite to Ponce, but we were talking to people who live in it's probably pronounced Ponce. And they were saying, it's overblown what the earthquake did. The older buildings, your 200 and 300-year-old buildings, yeah, they suffered a lot of earthquake damage, but most of the buildings built since World War II, there was no problem. So it was interesting. I encourage you to go down there for yourself sometime between December and May some year and check it out. It's a tropical island. It really is, a good time. We were lucky that I was able to make some connections down there through a friend, and so we had some tour guides. And like I said earlier, it may not be an investment for you, but I think that certain people are going to find some investable ideas down there with regards to businesses and real estate, or just relocating because of the tax code, which is very favorable if you're in a service business. Definitely some rules, and who knows when that tax code changes, right? So San Juan was very interesting. I tell you, I need to go spend some more time there. Met some good people, but the Rincon side, the west side of the island, if you just want to chill out and play in the ocean, and have kind of it's not luxury, but have a kind of a real small town experience, but on the ocean, I'd say check it out. I happen to run into a whole table of people from Milwaukee, so I bought them around the drinks. I knew a couple of them, which small world, right? But I recommend going there if you're looking for a tropical place that's not, and this is what one of our contacts said, it's not first world, but it's not emerging markets, right? It's not emerging world either. It's somewhere in between. It's, he called it second world. So I keep that in mind. You're not going there. It's not like Hawaii where there's just tons of people and everybody is out there in their BMW. This is, a lot of 1979 Jeeps, and I do recommend, if you go, spend the extra couple $100 on four-wheel drive. We got stuck in the mud twice, so always get four-wheel drive. My girlfriend took that upon herself, and I had told her to get four-wheel drive. She didn't want to spend a couple $100 extra. Now we wish we would have. It was kind of fun getting stuck in the mud and having people help us out. But it was one of those things you're like, it would have been nice to have four-wheel drive. In any case, we're going to talk about the market today. You see the headline, sell almost everything. Nice bubbly picture. I'm going to make this into a report and get it on the services. I'll load up about 10 more charts. But by options expiration of March, I plan to be 75% in cash. Here's why. The euphoria among greater fools is here. So with trading online becoming essentially free, you're just seeing a spike in trades. Why? What makes this right? Is it just because the trades are free, so people should be trading more? Are they brilliant? Did suddenly in the last couple of years we find all sorts of great traders? I'm pretty sure that's not true. This guy, he goes by Harry Dunn 88 on Twitter. He's one of the Elliott Wave guys, so I would follow this guy on Twitter if you're out there. I like him a lot. He's a smart dude. Doesn't do everything quite as traditionally as the other Elliott Wave people. He really grabs some great data, so I would check this guy out. He points out that complacency in the market, as represented by the put-to-call ratio, is again at an extreme low. If you take a look at when the other times are that this hit an extreme low, you see that usually presages some sort of correction. We are really, really low here now. Nobody is betting against the stock market. So I'm going to start betting against the stock market. Why? Because almost universally, if you take the other side of this bet when it gets extreme, you win. So I'm going to start buying some S&P 500 puts. I'm going to buy S&P 500 puts here very soon. For those of you who don't want to speculate on the move, writing covered calls on your positions right now, probably the Aprils, at the money, and take as much premium as you can at the money is probably a good way to take some risk off. No, I still think that you should be moving towards a heavier cash position. But if you have favorite positions that you don't want to let go of, and you just want to take a couple dollars off, writing the cover calls is the way to go. Ultimately, we would expect a correction here. Here's something else. So today we got the PMI numbers, and it came in at 49.6. So this chart doesn't reflect the 49.6 yet, but what do we know about when PMI falls off? Generally get a correction, right? These things move in tandem pretty well. There's been a divergence in the era of quantitative easing. So in the era of quantitative easing, we've got this divergence where it doesn't matter, the things have started to fall off again. But what do we know about alligator jaws? Usually alligator jaws close. Right now, the stock market's an alligator. So the last time we saw this go down, we got the sideways market in 2015, 14-15, but that coincided with super cheap oil prices. What do we know about oil prices? Probably not going down much anymore. And if you were paying attention, the shale numbers are showing no growth right now. So over the last 7 or 8 months, shale hasn't been producing any more than it was 7 or 8 months ago. Why? Because all the firms out there have been tightening up on their production. I'm going to speculate right now that Exxon, which is projected to spend $30 billion in development in the next year or two, is not going to end up doing that, and that will further tighten the oil market. And I still think that if there's a conflict in the Middle East, that is your chance to escape your fossil fuel holdings once and for all if you get a really good rally on that. But ultimately, we would expect, and Goldman Sachs and Morgan Stanley just said the same thing in the last day or two, this has to show a correction. Now, part of this has to do with coronavirus. People who think that coronavirus isn't a big deal just aren't paying attention to what's going on in China. China reported 6% growth the other day, and there's no way that's the truth. There's just no way. They have almost completely shut down their tourism industry. One of their airlines just went bankrupt after 2 months of this. How does an airline go bankrupt in 2 months in China? So when you have this big of a disruption where companies aren't working and tourism isn't moving, you're probably at a negative GDP number for the first quarter in China. They will never tell us that, but we'll be able to derive that pretty easily come April. So I would be very careful about thinking this is going to rebound hard in the second half of the year because there's inventories out there that really aren't getting worn down quite yet. So if we know anything about history, it just means that demand is gone. There probably won't be pent-up demand. The supply and the demand are matching because, frankly, people just aren't shopping right now in China. So with PMI falling off, could we get a little bump back up to 51, 52? Sure. But any sustained rally back up to the 60 range, which is usually a sign of really good health and actually close to the end of a cycle, probably isn't here yet. We're probably going to chop around in here for a year or so. During that time, earnings will fall off. Now, will the super smart new traders be able to change history and prices don't matter? Maybe it is different this time. I don't think so. So if we want to take a look at the monthly chart on the S&P 500, This is the range that I think the stock market will get back into at some point. Right here is the correction in December of 2018. So that's the top of the range. But this is the double tops, 2000, 2008. We could conceivably get down to 160, 165, 170 on the S&P 500. I don't think it's unlikely that we get down to this 220, 230 range, and quite possibly right in the middle. We could completely wipe out the Trump bull market by the end of the year. So on this monthly chart, what we see is that the market's overbought on RSI, but money flows have started to drift down. Remember, this is a monthly chart. We're taking the end of the month measurement. So that gives us a long-term perspective on the institutions. As I started telling you a year ago, family offices and the institutions have been in perpetual selling mode. That's the big money. The weekly is just coming off overbought, and with a rally for a couple of weeks would go overbought again. The money from the smaller people keeps drifting in. But look, MACD is starting to flirt with turning over. On the daily chart, we just have this drop in the last couple days, and money flow has fallen off a little bit. And again, MACD is starting to turn over. So if we get a rally in the next couple of weeks, right? Because now it's down here and you'd expect it to go up. And this is falling off. And after today, it'll be down in here, right? Because today is a down day, about 300 points. Should bounce back up. This should rise. This will be down like after today. Will be lower. And then it should rise back up, come Tuesday, Wednesday, Thursday. So on the daily, these short-termers, all these new brilliant traders, they'll buy the dip. And they'll buy the dip and push it up for a week or two or three. But come March, there are certain seasonal things that kick in that I think are probably going to weigh heavily on the market. The first thing is that the retirement plans stop contributing big amounts of money in March. The last big contributions are basically by March 15th. So you have the option expiration on the third Friday, which is, what is the third Friday in March? The 20th. Big money stops flowing into the market this week. By here, I want to be very heavy in cash. Especially if we get this little last hope rally. If we get this last hope rally, you're really going to want to sell into it. All right, so that's just a summary of where we are at in the market. Alligator jaws normally close. I don't think that there's a strong argument that suddenly because trades are free, everybody's a brilliant trader. But they're trying. Look at that. Anytime you see any chart like this, either somebody has reinvented the wheel and they're selling lots of it, or we're in imagination land. I don't think we invented millions of good traders. We are in imagination land. We are in hope land. If you are on Twitter, you hear people getting snide, right, about their trading and how smart they are. I was sitting next to a couple of women a while back in a cafe, and they were both talking about their stocks and how they're all going up. I'm telling you, they were just, they were not traders. They were just 30-something-year-olds who were putting money in the stock market. I don't even remember what they said that they were invested in. But they had no idea what they were talking about. It went up, so that made them smart. And this is the same thing that I heard in 2007 when I told people to start selling their stocks and sell their real estate holdings, and people fired me and told me I didn't know what I was talking about. in 1999 when I told people to sell into the rally over several months, incrementally, which is how I do it. I don't pick a point, sell incrementally. They told me I was nuts. I'm telling you right now, we're going to get a doozy of a bear market. It'll probably be the first bear market of 2 or 3 that we'll see over the decade. If Bernie ends up being the nominee for the Democrats, Republicans will blame Bernie. But I'm telling you, it doesn't matter who gets elected at this point. This market's probably coming down by the end of the year, and you're going to have to reckon with that. So, everything's been in place for this to happen. I've been talking about it for a year and a half now, that this was the year that we had to be afraid of. And it's all starting to manifest right now. This is a big deal. It's a big deal. So I hope that nobody is confused into thinking that charts like this are the reality. And I'm going to show you some charts like this in the second part of the presentation. So on our investment services, we have Ask Me Anything threads. And I'm going to go through a couple of things. I have some charts up that I'll slide over here in a moment, and we'll walk through them. We're going to focus on solar and gold because that's where the action has been. And we should know what our big themes are for the 2020s right now. We have demographic change, we have technological change, we have huge overwhelming debts. How do all these things play together? Where do the winners come from, right? And the winners are going to come from companies that are able to disrupt the marketplace. Energy is one of the places where we're seeing the biggest disruption. One of the stories in Puerto Rico is they have, I believe, the 5th biggest solar and energy storage program in the world going on there. Just as an aside, I bumped into somebody at a restaurant called Shipwrecks over in Rincon, who's on the board of directors for a company that is doing aquaponics and hydroponics, which, if you remember what I talked about in a different call after I was at CES, Puerto Rico doesn't have great food security because the weather, although things grow, the weather is volatile enough that crops get wiped out from time to time, and they, for whatever reason, agriculture is not well done there. So this company is doing hydroponics and aquaponics, and they're actually looking for investors. So I will throw that out there for folks if you're interested. I don't think there's any big money in it, but if you want to be supportive of food security in Puerto Rico, that's what this company is doing. They're talking about being profitable by $150 million by next year. Who knows? I didn't look into it that much, but I thought it was interesting that an idea that I've talked to you about is an alternative investment strategy, which is vertical farming, aquaponics, hydroponics. It's coming, and it's not only coming to places like Puerto Rico, it's coming to the rest of the world. And I've seen it in Milwaukee. We have some of the, Will, now I'm going to forget his last name, but Will something or other did the hydroponics. He got that medal from President Obama several years ago. He set up shop in the inner city, started growing food and distributing it. That's, not what these guys in Puerto Rico are going to do. They're going to sell. But, it's interesting that climate change, which is one of our big themes, is impacting business, not only in energy, but in food. So I think that these are all ideas that we have to just keep revisiting to see where things are heading, which ideas are going to be profitable, where the disruption will be. So let's take a look at solar here real quick. This is something that, oh, there we go. So I've been moving towards TradingView, And now that I'm starting to understand how it saves my charts, it's actually kind of handy because I didn't have to put this in today. It was already there when I opened it up. So the solar ETF, Invesco solar ETF, I think this is going to be one of the biggest ETFs of the 2020s. In fact, I'll have an article here soon titled, "The 2020s will be the solar decade." The growth out there in the emerging world for solar, they don't have grids like us, is immense. And this is coming to the United States. California's pushing it. Northeast has it, is pushing it. And it's going to displace 100% of coal by the end of the decade. We won't be using coal in the United States in 10 years. And in fact, if Bernie or Elizabeth Warren are elected president, I would say that we're off coal within 5 years and probably stop exporting it. So, keep that in mind. What types of disruptions can come from the political system? That's part of our 4-step process. Look at the secular trends, look at the impact of government and central banks, then look at fundamentals of the industry and then the companies. Then finally, here, we take a look at the technical and quantitative data. So with solar, we correctly identified a couple of months ago that 26 to 30 appeared to be the buy zone for TAN. And sure enough, if you were buying between 26 and 30, you are up handsomely. Now, these candles are unhealthy from the standpoint of we are severely overbought on the weekly chart. But MACD is still going up. So there's probably a little bit of time left to trim here. I don't think that I would want to not trim, but I wouldn't trim a lot. And in fact, if I don't have low double-digit percentage in solar at this point, I would just be looking for pullbacks to buy. And I think that this line is probably going to move up to about there, right? So I think you can probably buy the solar ETF right around 34-ish. I don't know that it'll come down much more than that. But if you do get a chance to buy in the 26 to 30 range, then you probably add more to your position. We can take a look at this on the different charts. So the daily, I like the weekly charts because I think they're easier to deal with. Clearly looks like this is going to turn down short term, which tells me that 34-ish is quite possible, right? On the monthly, though, here's what you're going to see. A lot of demand. And this 0.2 isn't a huge number. I think you're going to see perpetual strong demand. We just need to get a small correction. Solar is going to be a buy the dip investment for years because the growth potential of solar is literally 1,000% over the next decade. So you're going to get a lot of 10 baggers in this group. It won't be all of them. Somebody asked about First Solar and why I took them off of our very short list. And this is partially philosophy. I don't want to invest in good companies. I want to invest in companies that are potentially great. Why is that? Well, because I can buy good just by buying the industry ETF, right? So if I buy the industry ETF, I can get good, right? Just by being in the industry, I can get good by picking the right industries. What I want to do is find the handful of outliers. What are the companies that I really think have the potential to be great? So between TAN and then Global Clean Energy, which also has a parabolic move here, I want to own the group, but then I want to try to find the big winners. Well, what's a company that we've been focused on that we've should all hopefully have bought quite a while ago. End phase, right? When it was in the 20s, I was telling you, buy it in the 20s, and now it's 57. Now, this has got to come back at some point, right? I think you're going to have a hard time buying it under about 36. That peak right there, and this candle here on the weekly chart tells me that that 36 range is probably as low as you'll ever see it. And I'm not so sure that it gets there anytime soon. We'll need it to be part of a correlated correction to the market, right? The whole market comes down, everything sells. This probably loses too. So I'd be looking 36, mid 30s to buy end phase again, right? It's overbought on the weekly. If we go back to the daily, which is all your day traders and people that hold for a couple of days, once again, overbought again. You know, that's pretty extreme on the MACD. I mean, that's, you just don't see charts like that very often. So, you know, take a look at the institutional ownership though on the monthly charts. Big people want this. Why? Why do the big institutions want it? Why do the big family offices want it? Why do the big investors want solar? Because they see the trend. Alternative energy is going to replace most fossil fuels in our lifetime. Bottom line, that's what's going to happen. We're seeing it in emerging markets. They don't want any part of fossil fuels if they can avoid it. China has been flirting with turning over, and now they're looking at doing more EV subsidies. Not only to stimulate their economy, but just to get off of oil. So they're stockpiling oil so they can transition, so they never have to deal with expensive oil again. The Mongolian coal that they use is the big problem on climate change, and I suspect that there's a resolution coming on that soon too. So with batteries getting cheaper, Bill Gates just announced a lithium project that looks like it's going to lower the environmental impact of lithium. All these things are moving in a direction so fast that while I thought I might own oil stocks into the middle 2020s, I don't think that's true anymore. I think I want out the very next chance there's a rally. And I'll lick my wounds, and I'll remember this phrase: you don't have to make your money back where you lost it. Oil's the only thing that's kicked my ass, and it's done it twice in 4 years. So, I would, take a look at that and say, well, I can be stubborn and project and look in the past and say, well, the past is prelude to the future, and think, well, which past? 10 years ago or the last 4 years? Oil's in big trouble, to the point where, and gas too, to the point where I'm down to just thinking there's maybe a half a dozen companies in the oil patch that are even worth investing in, and they all are concentrated in the Permian. Why the Permian stocks again? Because they're going to get money for their gas that they weren't getting before. They have a new source of revenue that's not priced in. The gas plays out in the Marcellus, Antero, which I got clocked on. I don't think there's much upside. I think they're in perpetual decline because natural gas is not, no matter what Amy Klobuchar or some of these other people are saying, natural gas is not really the bridge fuel that we thought it would be. 5 years ago on Market Watch, I said that natural gas is the easiest play in my life, and I was desperately wrong. So the thing that I thought was the most obvious was the most wrong. It happens. Natural gas is not going to be the bridge fuel that we think. It's going to hang in there because coal is going to disappear, and they'll get a third, maybe a quarter of that energy generation. But everything else is going alternative. And all new generation for 3 years now, you need to understand this statistic. For the last 3 years, all net new energy generation in the United States and in really all the Western world has been alternatives, solar and wind. So keep that in mind. It's the world's changing and it's changing quick. So over here on gold, let's jump over to gold. I wrote that article just recently that said that we're in the midst of a massive move up in gold. So on this weekly chart, you see we're not overbought, and we've had quite the rally. We were buying GDX in the low to mid 20s. It broke out. Now it's 30. So most of us are looking at around a 20% gain. I think this is the tip of the iceberg, right? We're not overbought by any stretch of the imagination, even on the daily. It's just getting overbought on RSI, but money flow, you just don't have your believers yet. Take a look at the monthly, though. It's moving in the right direction, isn't it? Big people are investing in gold. Let's see if I can get a longer chart here. Let's go back here. This ETF pretty easily could get into the 60s. And I'll predict right now that it's going to break out past that because of all the reasons that I cited in that gold article. The consolidation in the gold industry, the closing of the difficult to deal with mines in countries where you had bribery and threats. The consolidation in the space has been so massive. The cleaning up of the balance sheets, the right sizing of the projects, the abandonment of the difficult projects. These companies are just going to drop money to the bottom line. If I'm right and gold goes to 3,000 over the next decade, and it still only costs $1,000 per ounce to extract it, that's just a huge amount of money to the bottom line. And let's say that the cost to extract it goes up a little bit. That's still a ton of money to the bottom line. So with some of our companies, Newmont, which we were buying right at the merger, has done very well for us. Here you go. We were buying it in here. And now it gets a big jump up. So right now I'd be looking at probably selling some covered calls on Newmont or take, a third of it off the table. Now you can decide how you want to do that. There's going to be volatility, but it's overbought on the weekly, overbought on the daily, and it's almost overbought on the monthly. So you'd expect it to take a breather. And I don't think this monthly is going to come down past, about the middle of the range, but the daily and the weekly will both tail off. So I would probably take a little bit of profit, take a little off the table with Newmont, or write some covered calls. I'll probably write covered calls because I just want to hold this stock for a while. It's a proxy for me that I like. And then we have Core Mining, which was a junior. They had a little bit of bad news this week. Their Silvertip mine has to kind of regain its footing. Lead prices and zinc prices dropped. So they're just going to, modernize some of their operations there and take a few months off from really ramping up production. But in the long run, as we talked about, zinc is going to be very important in batteries, and lead is just typically undersupplied. But I think the soft economy is hurting that right now. So, we'll see. I have no problem with the Silvertip pause. If you take a look at Core Mining's numbers, they all went the right direction. So I think this is another opportunity to sell $5 puts, right? Sell $5 cash secured puts, to April maybe. If you already have a position. If you don't have a position, maybe you buy just a little bit, 0.5%, and then sell some cash secured puts that match your buy. So if you buy 100 shares, maybe you sell one put. Depends how big your portfolio is, things like that. But yeah, 0.5%, 1% position in this company right now. I'm a little higher than that because I got the appreciation out of here plus my option premiums. But I think right here, see where this is? Then you had the little pause because this is the capital expenditure period that I talked about. And everybody's, oh, look, they're losing money. Well, it's because they were digging a new mine. And then they came back up. So this area right here in the low fives is pretty solid support. You know, tailed off on the weekly chart. Money flow and RSI. Go over here to the daily, right? Your short-termers, right? They're almost extreme oversold. It was a good time to sell puts. You know, when you get numbers down here, that's a good time to sell puts. You're going to get pretty good premium. Monthly, you know, hanging in there though. Somebody wants this. So, all right. Let me take a look. Is there anything else? Somebody asked about changing asset allocations versus just investing in the S&P 500. What were the studies? What do the studies say? And it's pretty clear that if you're a good asset allocator, if you just avoid the worst markets, you're going to beat the S&P 500 pretty handily. And you really don't even have to go super heavy cash very often. Almost never, actually. You'll generally want to be 80 to 90% invested in equities most of your life, even when you're old. Because by that time, you should have accumulated a nice fat bank account that'll cushion the short-term blows. And we know that when the stock market has a down period, it doesn't last more than a year or two. It could be very sharp and painful. Going down on the elevator is usually faster than going up. Logical. So if you're a good asset allocator, you can stay more fully invested. Just understand that from time to time, you know, about once a decade, sometimes twice or three times, there's going to be a huge bear market that impacts everything. I'm saying that that's coming. If you're not so sure, then go ahead and have a larger equity allocation and just make sure to avoid the disrupted industries. And then you should be okay. Somebody asked me, how do you play Newmont if you don't have a position? I would say probably just wait for it to come back just a little bit. Maybe sell some puts when it gets to around 40 if it does get back to 40. It's hard to buy it right now, right? Definitely hard to buy it right now. You have to wait for these to come down. The answer really is the same every time. You have to wait for the daily, right? We want a strong monthly chart. That tells us the long-term trend is. Then within the daily and weekly charts, we can see what the shorter term is. It's overbought. Wait till it gets back down to around 40. And if it gets down to 30, you know, you really jump in. Same thing over and over again. Learn to use these. I wrote an entire article about how to use these. We want a strong monthly that shows a good long-term trend, right? Look at that. Look at that. We want money coming into the stock. A rising floor. And then the weekly will give us kind of a more of a 6-month view, really. Then the day charts just kind of shows us where the action is today. When these pull back, as long as the weekly doesn't have a long way to go down, you know, these are good spots to buy. So wait for the appropriate technical signals. That's the same answer for any stock. All right. So we had some other questions, but had to do mostly with all what we've talked about: solar, gold, So somebody asked about general asset allocation. We have the ETF favorites on our very short lists. Take a look at those. But I'm not a huge buy a little bit of everything guy. So I don't really like the idea of avoiding our key industries. I would focus on the key industries. QQQ, I have my limit order set at 170. And I could see lowering those all the way into the 150s. So I think QQQ is going to head down to around 170-ish, maybe a little higher, maybe a little lower. And I think that'll happen this year. So, all right. I will just finish on a little general theory here again. Is one, cats are better than dogs. No, backwards. Dogs are better than cats. Who am I? This matters. This is a warning, right? This is unusually complacent in this market. I mean, according to this, it's the most complacent in decades. And this matters. We're getting an economic slowdown. How much of that was coronavirus? How much of it was already going to happen? I think most of it was going to happen anyway, but coronavirus has moved the needle a little bit. When you invest, the research has shown that being in the best sectors and the best industries and avoiding the worst, you're going to beat the S&P 500 and be safer. That's a great combination right there. For your individual stock holdings, don't piddle around with a stock that you think could beat the market by 2 or 3%. It's not worth the risk. It's just not worth the risk. Look for stocks that can beat the market by double or triple or quadruple. And if a couple of them actually do it, right, now that's the Peter Lynch thing. I buy companies that can be great, and if I'm right on a few of them, those handful of big winners change the nature of my portfolio experience, make it very, very positive. Go ahead and look up the quote from Peter Lynch. It had something, I paraphrased it. I don't know how to say it exactly right, but basically a handful of big winners and good asset allocation is what you're looking to do. And that's why I don't think owning any of these middle of the market stocks ever makes any sense. If you don't think a stock can significantly beat the stock market, don't own it. Just own the best ETFs, because then you're eliminating your individual company risk. So I own TAN, right? I own TAN because I want exposure to solar. And then I own a couple of companies that I think are among the best. I think Enphase, and we've been proven right on this, Enphase is a leader, and I think this stock will go well over 100 in the next few years. But it's got to pull back into the middle 30s probably, into the 30s somewhere. We can throw SunPower on here too. I've got people, technical people who say they hate this stock. Well, Jesus Christ, how much more basing do you need? At this point, you just have to ask yourself the question, is the business, are they doing the right things with the business? Right? Market's undecided on that. Even the big people, undecided. Right? Money flow has not been great. So on this one, I'm clearly the contrarian, and it just has started to go my way lately. Just started to go my way. So I've been buying this stock under 10 for a while. I bought some back here, sold a bunch of it. Still, some of it round tripped on me. I added again. Every time it got down to 6, 7, 8, what did I tell you? Buy it, buy it, buy it, and sell cash secured puts. So where is it right now? Was it 1042 right now? So I haven't even looked at the market during this call. Apparently, we've gotten a bit of a rebound. I think this stock is probably going back up to its highs. I think it's imminent the next 2 or 3 years. Then it's going to break out. I said the same thing with AT&T, right? Somebody says I've made a killing on that, SPWR, right? Yeah, take a look at something that's less sexy. Why did I say we were buying AT&T when it was down around 30? Why did we buy it down here? It wasn't because I thought it could go to 40. What did I say? I said that it's going to break out of its historical range, right? Been chopping this range forever. I think it's going to break out the new highs. I think not only is it going to break out of this box, right, this area here. I mean, think of this in a box. It's going to break out probably next year or the year after. Then it's going to go all the way to 60 once it has that breakout. But it'll come off a little bit, probably jitterbug around. Then I think it goes way up. Why? Because 5G is that big of a deal. So I'll finish with a company that I'm not a big fan of anymore, and that's Sierra Wireless. It's not a bad company, but it's not a great company. It's a good company. I don't know that it can crush the market anymore. I think that it needed to get more traction over the last couple of years, and it did not. Will they survive? Will they make money? Could they beat the market? Maybe, but there's some risk. So I think that Sierra Wireless is not on our list anymore, just like First Solar isn't on our list anymore. They're not bad companies, but I have a hard time seeing them really crushing their competition. First Solar, without the solar tariffs, would have had a kind of a tough run. And we saw the earnings that, what is First Solar today? First Solar's down a lot, right? I warned people on this. Today it's up, but it dropped a bunch. Yeah, there you go. Here's your big drop. So from 59 down to 50. So, this is something that we should examine over the weekend. Maybe First Solar is a stock that we can add after we read the earnings and decide, okay, where are they at? But I have a hard time thinking that First Solar is going to 100, 200. They're a conservatively run company, which is not bad. But they don't pay a dividend. If First Solar paid a 3% dividend, I'd probably take a look at them. But they don't. Same thing with Facebook. Until Facebook decides to do a couple of things, I'm not interested in them either. Now, I will say, Facebook has all that money, and I think that they're going to do something that makes sense at some point. I think they're going to do two things that make sense at some point, so I might need to get in on a correction, which, it makes QQQ even more attractive if I like Facebook again. So if Facebook, I'm going to finish with Facebook here actually. If Facebook ends up paying a dividend down the road and they spin off Instagram, which I think they're going to do, now all of a sudden I take a look at Facebook and go, wow. And here's the other thing. Zuckerberg, he's a cash whore. I mean, he just is. He's going to cash in on this election cycle. He's going to cash in on it. He's he's probably a Republican, so he doesn't care about the Trump stuff that's out there that may or may not be true. He wants Trump to win. So is Larry Ellison. So be it. Just understand the ramifications. If he's going to take the money on the election cycle, he's going to make a lot of money. There's a lot of money in elections. My girlfriend sold some billboards near where the Democratic National Convention is going to go, and they got 10x. They got 10 times normal rate. So, YouTube just got a deal with Trump advertising on the day before and the day of the election. Tons of money, huge money, Super Bowl money. So, at some point we just have to say, okay, who cares who wins? In my head, I'm an investor. Where's the money? Right? I'll vote how I vote, but where's the money? All right, here's what we'll really finish up with. Somebody asked about a Dominic update. Yes, I am going to get some Dominic cuddle time this weekend. The kid is looking like he might have blue eyes. So that's kind of neat. Dark hair, blue eye guy. You have to watch him, right? So I will continue his Jedi training. I've been had him on every time I babysit, get him on the symphony music, get that little brain humming. And so everything's good with the baby. And everything's good with the world. It's easy to see all the negatives in the world because it's the press and the media and the internet. It's so easy to get something ugly out there. Take a look around. There's a lot of good things in the world. Standard of living just keeps drifting up, even though wealth inequality has become a real problem. Saw that in Puerto Rico. But technology has done some good things. The AI isn't going to kill us anytime soon. And, the transformation of the energy system, think about this. We're going to have very cheap energy going forward. Imagine a world where energy isn't a worry. Think about that. That's pretty amazing. So if we can fix the water and the food and environmental situations as well over the next couple decades, this starts being a Star Trek scenario, right? Where it's just like you do what you want as long as you're productive and happy, it ends up being a good thing. So the world's getting better. I've shown those statistics, and that's on the very front page of the very short lists. Show all the reasons the world's getting, all the ways the world is getting better. Don't focus on the negative, and ends up being a much nicer place in your mind and in your heart. And then as far as the investments go, just do what makes sense. Focus on great for individual stocks, and then own the right sectors with your ETFs. And when you see an alligator, go the other way. All right, have a great weekend, folks. I'm going to let you go. And one thing that I am going to do now that I'm going to hunker down and work until the next trip is I am going to do a lot of shorter videos that have to do with the Ask Me Anything stuff. So I'll do an article with a short video, and I'm going to do a lot more of these presentations, get these chart books out to you. So that'll be kind of a core thing that we do going forward. All right, have a great weekend.